Welcome, traders, to After Hours at Traders Post for Friday, January 16th, 2026. I'm one of your hosts, Tom Hartman, marketing manager here at Traders Post, joined as ever by Peter, Exit Liquidity Hartman, to break down the market madness. After Hours is your go-to live stream focused on macro trends for retail traders. That's dollar, equities, policy, that sort of thing. After Hours is brought to you today by Blue Sky, the best-in-class prop firm that offers same-day activation, daily payouts, and no max restrictions. But we'll tell you more about them later. For now, let's turn to Peter and ask, hey, how's it going? You have a prop firm account now. Did you take a trade yet?
I did not take a trade yet, Tom. You got to stop asking me to do stuff. I got look. There's so much AI happening. I have to decide what to do, and the way I help traders post is by learning AI, not by making trades. But
Whoa,
I'm going to be doing
whoa,
that.
whoa,
I'm going to
whoa,
be doing
whoa,
that.
whoa. Whoa. I don't know. Who are you trying to be, John? Everyone here is a prop firm trader, all right, who's on the marketing team and product and customers. We're Trevor, Mike, me. You got to get on the prop firm wagon, or you're going to be part of the clique who's
Of
not doing
course.
the prop firm stuff.
Well, I gotta get on it because I gotta catch up to the payout poppy over here.
Nope. The sacred prophet prop firm payout poppy.
I was
Okay.
gonna call you the Sacred Prophet prop firm payout pig, but it's a different thing.
Look. Not what is it? 7% of traders make it to their first payout in prop firms, and half of that make it to their second payout. So, I'm in the elite sphere over here and headed into an even higher. I don't want to leave you behind, Peter,
Are you an elite?
because yeah, we're twins, and if it goes too far, don't go where I can't follow. That's the sort of thing that you should be.
Look, I'm gonna be the Hunter Biden of the duo, and you can be Bo Biden.
Oh God, oh Jesus,
Decorated, honorable. May he rest in peace.
oh God. You can't take my wife. All right, Peter. All kinds of things have been going on over the last week. I mean, it feels like a jam-packed week. The last couple of weeks have been crazy. Iran offensive, Venezuela,
Oh yeah, that's
Maduro
right.
being abducted. We had crazy volatility inside markets, even though we got to all-time highs in S&P. I mean, what's going on here? We're having some volatility here. We're also having Bitcoin rise up at the same time that the dollar rises. We had silver go up while gold went down. We have oil bouncing. It's just been all over the place. A beautiful smorgasbord of volatility events, seemingly non-correlated. It's like, how does the S&P get to all-time highs before and the Nasdaq doesn't? Something's wrong with the world. Nasdaq's the high beta. And so liquidity has been like the main
Wait, Nasdaq's the
theme.
what? The what? The high what?
High beta.
What is that?
Nasdaq is a high beta. It moves when S&P moves, Nasdaq moves more, generally speaking. So there's like a multiplier to the benchmark of the S&P. It's not exactly that, but oftentimes it moves in that way. So if the S&P goes down and Nasdaq goes more, if the S&P goes up, the Nasdaq goes up more.
So you
Not
didn't you
all the
didn't
time.
make up the term high beta just to sound cool or something?
No, not
All right.
not at all. Peter,
All right.
you got to get into prop firm trading. Your lack of
Wait,
knowledge when it comes to trading affairs
does
is
everybody in prop firm know about
embarrassing.
high beta and low beta and mid beta?
To be fair, no. It's people who like
There you
traded just
go. I'm
regularly.
gonna push
Yeah,
the
yeah,
button. I'm
yeah,
gonna
yeah.
pray to God, just like 95% of other traders.
All right, I get it. I get it.
Mhm. Before you go any
So,
further, I want to say hello to Adventurer Trader in the chat.
AV.
Everybody who's watching, Payout Poppy is the man of the people that he is. Well, he pretends to be. He definitely pretends to be. Remains to be seen if he's
Well,
the man of the. Well, he gives a lot of
I,
indicators. Does a lot of work. So I gotta praise you for that. Like you definitely do more for people than you even should. Really, honestly, I don't even know why you do it.
I know.
You should
I think about that
charge
all the time.
charge for it.
I think about that all the time. I keep thinking that I'm going to get undue praise and just laurels, cast upon me and rose petals laid before me wherever I walk. And what I get is not that. What I get is stuff like Mike calling me Tim now because
Yeah.
he thinks that's really fun. He thinks
Yes.
that's real
Thank you,
clever.
Mike. Thank you, Mike. My heart goes out to you, Mike. My heart goes out to you. I
I
like
mean, he's doing that even without you around. He'll call me Tim. When I'm
that.
being nice to him, he's calling me Tim.
It's good. It's
I
good. I'm glad he's
I've
got the
done that.
memo. Don't be
Well,
nice
here's
to
the thing,
Tom.
because I'm a very nice person.
Mm,
We're very friendly, very nice, very helpful.
mhm.
And there's only a few things, very, very, very few buttons that I have that if you press it, I'm Unabomber. Okay.
Unabomber.
And small acts of casual disrespect
Right?
just for fun.
Uh-huh.
You can
No
insult
more.
my mom. Don't call me Tim.
Don't call me
Don't
Tim.
call me Tim. So you
We
sent
need
out the
that on a
memo to
t-shirt.
everyone since you're the one who started this whole thing. You let everyone know, Tim, it's off the table. We're
I
Payout
could
Poppy.
I could tell them your real name. I know you better than that, but I could tell them your real name. I won't say it.
I would take that over Tim.
We used to get into fisticuffs. You used to want to fight me. I've never said your real name in public.
I've grown.
Tom, but I want look after hours. I kind of wanted to look. We're going to talk about the markets. We're going to talk about all that stuff, but I also want to talk about like your trading this week, getting to a payout, price action live. I want to hear about people out there if you've traded and how did that go for you. There's a human element for after hours that I want to connect with.
Yeah. Well, I've learned something here about prop firms and trading on prop firms that I just didn't have any sense for, even though I was creating indicators and strategies for people who are doing prop firm trading. I never asked them about their success and if they're going to payouts or anything like that. Why? Because it's a sensitive subject and most people are losers. So,
Right. So
I'm not going to start asking them how they lost. But
you figured out the secret, the game changer.
well, you have to have a different way of thinking about the prop firms.
Uh-huh.
Now, we've heard this from Ike. We've heard this from Tyler. We've heard this
Forex
from
Ike,
Sahil.
Tyler G, Sahil,
All these people who've
Vedic
been
Trades.
on Price Action Live and on Alpha's interviews just explained to us, hey, this is the thinking that we have in order to be more successful. And I just completely ignored them because they didn't know what high beta was. So frankly, I just ignored it.
I'm a little concerned. Yeah.
And then I realized that what they were talking about is exactly what's necessary, right? So it's actually, we're going to get a series of indicators, not now, but in upcoming, which I'm going to be calling. Well, I'm doing this on Sacred Profit, and I'm going to
Spit it
do
out. Spit it out. What is it?
tactics. They're going to be strategies that are tactics, not strategies that are running long term. The strategies that you just place on the chart for this particular setup, that you identify the setup, you set the different levels, and boom, for that duration, for that, it'll run the script.
So it's like
The
kind of
problem,
like having a special ops, but when they get onto the field, they have to make a decision in the moment, and it's not some strategy that was planned out. They have to like execute in that moment.
yeah. So if you're, it's a play in football. So you place this on the chart, and it'll do that play.
Right.
But it's not trying to do that play all the time, which is the problem with strategies when you're running them normally. You're expecting you run your strategy on the chart. You've seen this a dozen times, and we show the equity curve, we show the performance, and we go, hey, this strategy has a 73% success rate, has a drawdown of $3,000, and makes about 200% profit over this period of time, blah blah blah, on this account balance. The problem with that is the drawdown. The drawdown is the big thing, because your strategy can go well, and you could even be well into profit. But if you draw down, you then blow out the account. So for some of these prop firms, no, just like if you had a short-term dip, or sometimes you had a few tails in a row, a few losses in a row,
Right.
it'll blow out the account. And you're like, I don't understand. How am I supposed to handle this? And what I found is that you guys will see, you'll have strategies where there's periods of time in that strategy where it goes on these runs. So you basically have to run your script, your strategy automation during those runs, right? You can't have this set it and forget it strategy. You have to activate it at very specific times. Now, the difficulty that people have is programming that into a strategy for it to look for the perfect setup. Because if you look for exactly perfect rules, those hardly happen. And and you might have one trade per 2 months, but where that occurs. But if you were to look at the chart, you see, hey, this sort of resembles what I'm looking for, and programming what sort of resembles something in PineScript, difficult, difficult even for programmers. And so I want to be able to have these tactics that you place on the chart, and you're like, hey, this is a setup. I can see it came in, the Nasdaq rose into the overnight. It had this sort of effect in the Asian market, so I'm expecting this sort of trend for this day. And so I'm going to set my levels over here with my risk parameters, and it'll set the strategy just for that snippet of time. And that's sort of what I did when I was getting my payout, is that I treated it like a tactic and not this overall strategy that I'm just running.
So you have to. So you, in this case, you have to use your own brain, your own discernment to know when to run this play, or
absolutely
does the strategy figure out, oh, this is a moment where that play needs to be
executed? That's it. You have to do it. You have to set it. You have to be like, oh, I'm seeing a channel over here. Let me go, and I think the channel's starting. Let me set up the levels for this channel for it to go. And then as it bounces through that channel, it takes the trades, but it's not considering the entire history of this asset, just this period you're looking at.
Won't that isn't that an Achilles heel for bots?
No, it is a bot.
Oh, so how do you know when to execute that tactic?
You'll set the tactic to begin at a certain time, end at a certain time. You'll drag your levels at the levels you're talking about, depending on what type of tactic we have created. Because let's say today you determine today's going to be a downtrend of a day. My target level is down over here. We're over here, but I don't want to have to manage it all day long to see when it's going up and when it's going down and what it should do in different conditions or whatever. I just want to set that up, and in that strategy will be 3 different conditions it's dealing with. Right? If it waterfalls, if it jags sideways and then down, if the trend happens at 12 o'clock versus 10 o'clock, whatever, it'll account for that, but just in that snippet. And then at the end of the day, it'll be done, and you have, you put the tool into your toolkit. But that's coming down the pike.
All right.
And I know it works because Sacred Prophet, Prop and Payout Poppy, he did it. So,
well, congratulations. It must feel good. So how does it feel? We do these interviews. Mike does these interviews. I always curious, what does it feel like to get your first payout? I know he's asked this question a couple of times to interviewees.
Like nothing. Well, I don't, me, I don't celebrate things that already happened. I only celebrate things before they occur.
You barely even celebrate those. Okay. So there is something to the intellectual exercise of trying to figure things out, improving, trying to figure things out, and then actually figuring out the key. Like, did you have a feeling like I reached to a moment where it clicked, this aha? Is it that tactic thing you're talking about? Is it also the time-based thing you're talking about? Did you have this feeling like, oh, like I know I'm doing it right, or was it still kind of luck?
Yes. So it was very much like when I was doing stand-up before. And then I tell the joke, and I tell the joke now in a way, oh, this is following a joke format. I get it. This is what a joke is. And I say it, and I get the response from the audience. That's the laughter that I expect. Aha, that I anticipated. I go, perfect. I understand what this is.
So similar to that, once you get that rhythm with a joke, I know this too during stand-up, next time you have a joke, if you have a reasonable expectation that this joke is going to do well. It's not a mystery to you when you say this new joke and it does well, because you understand the pattern of how that works.
Correct.
Ah, interesting. All right. Ventura says, I'm so impressed Tom got a payout. You, me, his mom, and the Lord, we're all impressed. Very impressed.
I've been successful in other areas of trading. I've demonstrated my chops in that respect.
Yeah.
All right. I've made pretty money inside of trading, and I've also created different tools that are fantastic, and I'm very knowledgeable across assets. And so it's just de rigueur that I would learn prop firms and become an elite trader. Okay. It just makes sense.
What is that? Matter of course?
It means the rigor.
No.
No. Sorry.
The expression. All right. Okay. That's cool. I get it. I don't want to beat a dead horse here, but well done. I am looking forward to repeating it is going to be the key, right? That's going to be the real test there, doing it again and again.
0 to 1 is the hard part. 1 to 10 is even easier still.
It's like mapping the genome. That's a deep cut for TED Talks that most people are not going to know about. Rakerswall,
Liquidity,
how's it doing?
poor.
Ooh.
Liquidity seems to have topped. Now, what I'm enjoying, my favorite macro points are always in the turns of cycles.
Mm.
I love the turns of cycles because you have on one side people who are realizing that the cycle is turning or prepared for it, and they're preparing for a downturn. And then you have the other group of people who just linearly project. For human beings, just regularly, linearly project. And so when things go well, they think the future things are going to go even better than that. And when things go flat, people think that forever it'll be flat. And when things are going badly, they think the bad is going to last forever. I don't know why. I don't know why traders and investors are like this. We see on the chart the things go up and down and up and down and up and down and up and down. Yet somehow we're
Well, don't
always
you find,
surprised by the tops and we're always surprised by the bottoms. I don't get it.
but don't you find that people actually operate like that in their day-to-day life, even not including the market? Like their emotions and just kind of carry them in a way that I've seen people overreact to things, and you're like, well, hang on, like this is not the end of the world, and you don't have to put your hair on fire. Like just logically think your way through this problem, and you'll come out the other end. Haven't you had ups and downs before? You've experienced this, right? I just broke up with my partner, and you're like, maybe you're
Right.
22 years old. You're like, okay, chill. Like, you know how this game works, right? You're not necessarily going to be with that person forever. Like, just calm down. My life is over. You're 22. Like, you'll make it. Like, just look around. So maybe it's kind of like that.
I accept that from regular people. I don't accept it from people staring
Right,
at charts all day
right,
long.
right, right, right.
You see it. Anyways, what's fun is that there are people who are so invested in their narrative that they just can't let it go.
Mm,
If they let it go, then they were wrong. Like they were significantly wrong, and
right.
especially if other people are following what they're saying and they said, "Hey, this thing's going to happen." Oh my god! Which is why I hardly ever say things are definitely going to happen, other than that things will happen that are black swan events that are outside of what you expect. And so I just wanted to go over this tweet here from Julian Biddle. Really epitomizes what I'm talking about. Let me get this here. All right. So Julian Biddle and Raoul Pal worked together for Global Macro GMI, Global Macro Investor, and they've been calling for this massive rally in Bitcoin to record highs in this cycle, in the cycle that we're in. And the whole pitch is that the idea is that we were supposed to get there by October of this year if the 4-year cycle for Bitcoin was to continue, and that didn't happen. And so they sort of been like going back to the drawing board. Hey, why didn't that occur? And they said stuff like, "Hey, because of COVID, the refinancing cycle for debt got extended by a year, and so we have to expect that it's not a 4-year cycle for Bitcoin, but a 5-year cycle, and that we're going to get this blow off top by the end. Altcoins are going to run, all these things are going to happen, and we're going to get our chicken tendies, our Bitcoin tendies, where it just moons." But it hasn't happened. It hasn't happened. It hasn't happened. It hasn't happened. It's now January and it still hasn't happened. I also thought that Bitcoin would moon by October, but I was saying previously that October 20th is my line in the sand. If we haven't rallied by then, well, now I'm looking for bear market stuff, right?
Charles Hoskinson from Cardano was expecting that Bitcoin was going to go
I
up,
mean,
and not only that failed, the crypto legislation that they were expecting clarity on that didn't pull through. David Sachs, I don't know what he's doing, but there was all this activity and then nothing.
exactly. And so there's all this, money's coming in, and Michael Saylor is buying Bitcoin, and Larry Fink is saying that Bitcoin should be, 2% in BlackRock or whatever it is. And Donald Trump's administration is supposed to be all Bitcoin. Look, they even launched Trump Coin. We could forgive that because, hey, they're going to pump our bags up. Bitcoin Strategic Reserve, Ethereum, Cardano, all the stuff, Solana is going to be inside of it. Then we got the tariff wars in March, April crash. And then we had, hey, Jerome Powell's going to be cutting interest rates, and he's caving into what the Donald Trump administration is asking for. Jackson Hole, August, he says, hey, liquidity is going to start coming back in. And that's exactly when the dollar bottomed and started rising from then. And boom, we've had liquidity problems since, right? So the dollar here on the dollar chart And this low here that we saw on the DX futures, on the DXY, is a low of when they started cutting rates, and since then the dollar's been up and to the right mostly. All right, that means liquidity tightness. And
Right.
so let me just read this post from Julian Biddle, who regularly is putting out, "Hey guys, don't worry. Our expectation is still that the big magic moment for Bitcoin will still occur,
Really?
especially as S&P was making all-time highs and Nasdaq is close on its heels." All right, Julian Biddle on X. I posted this earlier in the week on Real Vision, but thought it was worth sharing here as well, just to give everyone something to think about. If you step back and look at the data, something interesting is happening in markets right now. Actually, can you read this, Peter? I have a bit of
Yeah,
a cough.
absolutely. If you step back and look at the data, something interesting is happening in markets right now. When you line up liquidity with equities, you get this chart.
One second
And
here. Let me just pull up the chart so you can actually see it. All right, can you still read that?
yes, you get this chart. And then compare that with the same liquidity measure versus Bitcoin. That's chart two. A simple truth emerges. Both cannot be right. Either equities
So
are
I'll just pause you there. On the left side, this is liquidity. Their global macro investor plot the black with the Nasdaq, right? Nasdaq in red and liquidity in black.
Mhm.
And then we have the same liquidity in black, but with Bitcoin in red
Huh.
here.
Both cannot be right. Either equities are fundamentally mispricing liquidity despite trading near record highs, or Bitcoin is correctly signaling that the liquidity cycle has already peaked and that risk assets are about to roll over. Only one of these outcomes can ultimately be correct. Now let's separate data from opinion for a moment. The data is clear. Global liquidity has not yet peaked. Now
Okay,
to my
just pause there for a second. Now you'll see that um, they're making claims, right? They're saying that global liquidity hasn't peaked because the projection is up. But I just want you to keep in mind here, liquidity, they're talking about the money being pumped into the system by credit issuers, by the Fed, by central banks, and stuff like that. There's two types of liquidity injections. You can have a bull market that has liquidity injections that expands a bull market even further, or you can have a deflationary environment where the liquidity comes in just to bring things up to stable.
right, right.
So just because liquidity is increasing does not mean that the liquidity is being poured into a hole, and that
Right.
hole, if it's deep or and deepening, that liquidity just gets eaten up and disappeared. Sort of like paying half of the interest, your credit card payment on your credit card. It doesn't matter if you're paying it. It doesn't matter if you double it. Your credit card amount is still going to go up because the interest is accruing faster than the money that's being put inside. All right, want to continue?
Yeah. Now to my subjective view. I think Bitcoin remains the outlier here, and that the events around 1010 temporarily distorted price discovery for reasons I've discussed at length previously.
1010,
Equities,
what happened was a massive Sigma event on Bitcoin. If you remember, Bitcoin fell dramatically. This was the whole tariff thing, tariff wars. And there was a whole glitch within the crypto exchanges that's not transparent. It hasn't been told. We've just heard this, secondhand by people like this and like Tom Lee and all that. That some glitch occurred and liquidity just completely disappeared from the crypto exchanges because of a problem with the stable coins. And what they needed to do was that the crypto exchanges needed to buy to stop the bleeding on crypto. I think it was a 7 Sigma event, a 10 Sigma event, something crazy, and that they had to buy the assets, and now since they have to buy it, they only bought it to stop the bleeding, and now they're selling into every rally in Bitcoin and keeping Bitcoin where it is because they have to unload all this. They unload those bags, and the idea is when that's cleared, then Bitcoin could rise back up. So, anyways, that's the 1010 thing that happened.
1010 temporarily distorted price discovery for reasons I've discussed at length previously. Equities, credit, and broader risk assets are behaving exactly as you would expect in a rising liquidity regime. They're hovering near all time highs. Bitcoin, by contrast, is pricing a liquidity peak that the data simply does not support at this stage. At some point, you have to step back and ask, is it more likely that one asset is right and that every other Bitcoin correlated risk asset is wrong? This is chart 3.
That's
If you
this here.
then if you then layer in broader financial conditions, it stops being about opinion and becomes more about probabilities. Chart 4. What really stands out to me is the sheer magnitude of the excess fear gaps that have opened up relative to the macro and liquidity fundamentals. Right now, the weight of the evidence suggests liquidity is still rising and, in our view, will continue to rise. And that is what risk assets are reflecting. That means Bitcoin is the anomaly. What I've done here is present the data objectively and my view subjectively. This is the battlefield for 2026. The bull versus bear debate comes down to one thing and one thing only: the direction of global liquidity.
Dun, 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 dun. All right. Well, we're gonna have. Let me play a little clip here from Brian Armstrong, who's going to be talking about the Clarity Act. So, on the heels of all this in crypto land, is this whole idea of the Genius Act and the Clarity Act that was supposed to come in order to bring stable coins into the U.S. purview and to bring a clarity to the regulation around the crypto sphere. This was the whole thing. This is a whole thing uh, where the crypto czar David Sachs from the All In podcast, the Grifter podcast, and all the
They're not grifters.
they,
I love those
no, they
guys.
call themselves that. All right, they're the ones sitting there. Oh, when do you
okay.
want to sell into the
I see.
sell your bags of crypto into the audience, to the people, and they go, oh, not yet. They joke around being grifters. Okay, I mean they don't say the word grifter, but grifters are going to grift, as well as all these people who came into the administration, the first couple of months, going, "Hey, let's put together a bill. Let's get the crypto strategic reserve set up, and all that, And Brian Armstrong from Coinbase, the CEO of Coinbase, was part of this crew. Things aren't going very well in that space. So we're going to take a look at what's going on there, a little bit from him, a little bit from Charles Hoskinson, and we get a clearer idea here that if retail isn't coming back here into the crypto space, where exactly is this rocket ship supposed to go? All right. But a quick word first from our sponsor.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with Traders Post, it just clicks. You connect Blue Sky inside Traders Post, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with Traders Post. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
Here we go, a quick clip from Brian Armstrong's interview with CNBC.
Well, I think the high-level principle here is that we can't really have banks come in and try to kill their competition at the expense of the American consumer, right? People in America should be able to earn more money on their money. I think stablecoins are an opportunity for banks. They should be able to build great product lines with this. It's an opportunity for crypto companies. Congress and the laws that get passed, they should really create a level playing field and say, this is allowed, this is not allowed. Now, all American companies, go compete, try to build the best products and services. That's great. What's not great is if the banks can put their thumb on the scale to try to kill some of their competition, and they only pay about, 14 basis points on the average savings account. Consumers should be able to earn 3.8% on their stablecoin rewards. And so we're going to keep fighting for our customers' rights and the 52 million Americans who use crypto every day.
I mean, what would you say to the argument that banks have put forward that because of the role they play in the economy, the loans that they make, if they do wind up seeing billions of dollars, as some have estimated would happen going from banks to stablecoin, they say that could have a big impact on the economy. What's your response to that?
Yeah, well, banks don't have a monopoly on lending money. Actually, crypto is doing quite well in this area as well. And crypto is a technology to update all parts of the financial system, whether it's lending, capital formation, et cetera. So I think banks do play an important role in the economy and making these loans. Crypto should be allowed to do similar types of activity. We're not engaged in fractional reserve lending. That's an important point, by the way, because the bank license, what that really allows you to do is fractional reserve. The banks don't have all of your money there. That's why there's so much oversight, and you can have these runs on the bank. Stablecoins have 100% reserve, right? And they're all the assets now post-Genius are held in this short-term U.S. Treasuries. So in my view, it's actually a safer place to store your money, and crypto companies should be allowed to compete and offer loans just like banks.
All right. Please raise your hand if you think that these people care about your rights. Just gonna wait here. Gonna wait here for a second. All right. That's the whole conversation here, right? They're saying, hey, it's the right of the consumer to be able to earn a yield on their stable coin. All right. The banks don't want this. Why? They don't want this part of the Clarity Act. Why? Well, why would you hold your funds at a bank and get 0.1% interest rate as opposed to 4% interest rate on a stable coin, where you can transfer it whenever you want? You have access to the crypto system, 24/7 access, ability to all kinds of different products that be created on the top of that, whereas the banks can't compete in that way. All right. And so the banks, the bank lobby is stonewalling this whole process, putting a huge amount of pressure in order to prevent this from happening. And Brian Armstrong is out there going, hey, and other people like him going, we don't want any part of this clarity bill if we're not going to be able to do this, because that'll be their edge. They want to be able to offer a yield.
Right.
Otherwise, what, 0% interest yield in the stable coins? It'll help kill the stablecoin market. So I thought it might be interesting here also to hear a little bit of the commentary here. This is a little bit of the JP Morgan earnings call, where they were talking about this whole yield thing. So let's hear from the horse's mouth on the bank side. It's going to be a little bit hard to hear because it's an earnings call, actually on the phone call, but just forgive the boomer static and listen to what they're saying.
Got to play the JP Morgan earnings call for you. We had some fun with it in trying to translate, because as you know, these earnings calls, they're complicated in understanding what they're really saying. So I want to play this clip for you, and then I'll get your opinion. Take a look.
Our first question comes from the line of Glenn Schorr with Evercore.
So I want to ask on the stablecoin issue, talking about the immediacy of the issue and whether or not they can close the loophole on interest on stablecoin, and then how big of a deal for the banking system if they're not successful. Thanks.
Right. Okay. Thanks, Glenn. We have an agreement with Coinbase, and it's going to be possible to buy crypto up in the CCB ecosystem too. So we're engaged, we're watching, we care.
I would just add one quick thing. Yeah. That letter was signed by the ABA, the FSF, the ICBA. It was all banks. It wasn't a handful of banks.
Okay. I didn't actually know that, so helpful. The creation of a parallel banking system that pays interest is an obviously dangerous and undesirable thing. And so that is the core of our advocacy. In the end, all of our thinking around this from a customer perspective is organized around the question of what actual benefit does the consumer get. We always embrace competition, so this is not about saying that we don't want to compete.
All right,
All right. So that's the JP Morgan earnings call where they're saying, hey, the Clarity Act, if it's done in this way, it would set up a parallel banking system. And obviously, it would be dangerous for them to be able to operate in this way. Oh, thank you so much. Thank you so much for the protection. Totally understand that. All right. So that's the central conflict here. Right. So even though I think
to play devil's advocate, it could be dangerous. Like the crypto space is it's immature from my perspective. There's a lot of sharks, a lot of predators that are in there. Could be difficult for people, very easy for people to be taken advantage of, especially in this new space. So I'm not totally opposed to it.
Raise your hand if you think that the banks are worried about you as a person and the danger that this sort of thing could pose to you.
Well, they may not be. They may not be worried about.
Raise your hand, everyone.
Well, they may or may not be worried. It's not like they're all bad. You can't paint them with a broad brush.
No, it's not bad. The
look,
concern is
it doesn't matter. Their motivations could be one thing, but their facts they present could be another. I could argue for something. I don't believe in the point that I'm making, but the point could be true and useful.
well, certainly the devil uses the lies and the truth in order to sow
Exactly.
discord
And
and
if
grief.
crypto is dangerous or can be for the average consumer who's not paying attention to the fine details.
Yeah, but this is
of
an
the
earnings
scams.
call.
Yeah.
The context of the earnings call is that they mean dangerous for their bottom line. The whole point of an earnings call is the profitability of the company that you're invested in.
You think that's what they were talking about? The danger was the danger to their bottom line?
Well, unless you think that they might be implying danger to the entire banking system.
Well, isn't
that
crypto
could
a
be-
danger, a threat to the whole banking system? Isn't that the point?
Oh,
I've listened to
absolutely.
enough of Charles Hoskinson to know that these people are out for teeth. They want to get some ears on their collar here.
Absolutely. Well, I like that you brought up Charles Hoskinson because this is going to be the next video that I want to see. This is a clip.
So they kind of need to justify.
This is a clip from his interview with why do I always forget his name? I always forget his name. All right. This is an
Is
interview.
that Billieu?
No, it's not. It's a good guy who's purely crypto. Wolf of all streets. That's what he calls himself. Streets. All right. So Charles goes on a little bit of rant over here, but it's super useful. You want to listen for the freedom. I don't want to put words in his mouth. You can listen to what Charles has to say over here. He talks about the Clarity Act and he talks about the state of the crypto market at the moment.
Some of them have spent over $25 million in donations and other things to be in those rooms and talk to those people. And some of those are public companies. So they kind of need to justify.
I should point out that ADA was removed not only from all the consultations, all the CryptoZar stuff, all the policy making, even though they put so much effort into that, they were kicked out. And the ADA will no longer be in the strategic reserve.
Really?
Yes.
Why didn't Charles just pay the $25 million?
No, they were lobbied out.
Right. You can't have the hall monitor there, I guess.
Right.
Justify with those press releases that they're making forward progress on this, because that's bad news if you spent $25 million and you've basically been taken for a ride. But here's the reality of the situation. I don't think the Clarity Act is going to pass in this quarter, and because it's an election year. We only have one left window, and if the Democrats retake the House, we will not have another opportunity till 2029. If it doesn't pass this quarter, I think Sachs should resign. He's utterly failed us as an industry. We look at three lenses. The price going up? No. Adoption going up? No. Do we have clarity and certainty, and do we have a strong foundation to build on? No. So if you're the czar and you're in charge of this whole thing, I got to judge you by your track record. Most cryptos are down 40 to 50% since Trump took office. So I mean, the industry's unhealthy.
Yeah, I guess the question is, how could he control what Trump did before he was even in office? The Trump token launched 3 days before Trump was inaugurated.
He was selected before Trump launched TrumpCoin. And what he should have done is say, if you do this, I'm going to resign, and publicly protest it and say there's no path forward for us as an industry if you do this. Because here's the irony of it, man. Trump could have made 2 to 3 times as much money launching TrumpCoin under the new regulatory structure than just launching TrumpCoin. That's the fucked up part of all this. Is he's so poorly advised by the people around him. If his goal is just extractive, he could have made so much more money doing it after the framework, because the new framework would have supercharged the markets and brought a lot of money into the markets, and you're launching a coin into a bull market. And also the Democrats can't complain because it's in full compliance with the framework they just voted for.
Then does Clarity, okay, obviously you've already said you don't think Clarity passes, but let's say that it does. If we get the Clarity Act, then can that still be the catalyst for that bull market that you're talking about? Because
but we got to get off.
At least the optics are that things are aligned.
We got to get off this U.S. dependency. The United States has to solve all the world's crypto problems. We live during the Gary era with international growth and non-U.S. growth. And I think we just got to get back to that, because the thing is, even if they pass Clarity, it takes 2 to 3 years of rulemaking for Clarity to be realized. So Clarity will pass, but it doesn't do anything after it's passed. There's a grace period of rulemaking that exists. So it's a MacGuffin, and it certainly will create a short-term spike just like the reserve announcement did or other things did, but nothing will compensate for the fact that retail has left. You need a new narrative for retail to come back. Retail got battered and burned and broken. They got in 2022, they got with NFTs, they got with meme coins, they got with the third generation. And a lot of these guys are down 70%, 80%. How do they go and tell their wife, I'm going to go do it again?
And by the way, whoever was
Very well said, as usual, by Charles Hoskinson. Even with the F-bombs, hey, you take what you can get.
Is that the word he was saying? I can tell they cut it out.
Yes, they bleep out swear words. I'm not sure where they do it on your side of Canada, but they bleep out swear words. So retail is not participating in this rally.
Yep.
In the crypto rally that we had since October of 2023, it's been institutional led and have rules they have to follow for volatility and for length of time and for performances. And if other things are going to outperform, they're going to have to rotate out of those assets into something else. And so how much money can actually be there waiting on the sidelines in order to pump Bitcoin up to massive heights, while we're seem to be in potentially a deflationary environment. If we take a look at Trueflation, the Trueflation metrics, Trueflation says that the U.S. CPI inflation today is 1.55. This is from, if we take a look at the numbers from the inflation numbers from January 14th this week, we saw that inflation basically almost across the board was down. PPI was down from 0.6 to 0.1. Core PPI, core PPI was up a bit. We had, where are you? Oh, sorry, I'm not sharing my chart. We had so this PPI is down. PPI month over month is still lower than it was, so 0.2 instead of 0.6. We have the where are you? CPI was flat month over month, flat year over year. Core CPI is down month over month and down year over year. And if we take a look at Trueflation, which is a third party measure of actual inflation that takes into account way more things that matters to regular people. The Trueflation says that our inflation index dropped further today from 1.7 to 1.55% as cooling spreads across multiple categories. The main driver includes housing, food, and household items categories. So we have inflation that's dropping across the board. But that is happening at the same time as unemployment is going up. Right, so this is deflationary. If unemployment is going up and inflation is coming down, that means there is debt destruction and demand destruction. Right, prices lower in order to cause more people to want to buy it. Right, if supply and demand curve, if you have demand that goes down, price goes down as well. And so this whole liquidity thing that we're having, the whole idea that, liquidity spike and liquidity is going to increase into 2026. Okay, I hear you, but it's within a hole. And that hole, the depth of that hole, we can get a sense of how deep it is by the echo that the deflation is showing us.
That's poetic.
The backside of that, we had the whole thing that Kim Carson's talking about, that Donald Trump is moving from the America First regime, well, not from America First, but from a conservative regime to a populist plan, where it's about healthcare and money for people and getting the economy going and all that stuff, and that's inflationary down the line. So we have all kinds of volatility that's happening within the economy, all kinds of volatility that have happened within the debt markets, all while we're basically at maximum complacency. If we take a look right now at where is it? Take a look at credit spreads. This is a great post here. I'll just read this before I let everyone go, because I know I'm very interested in all this. So Hedgeye shared this post. Corporate bond spreads hit lowest level since 2007. So corporate bond spreads. So you have the bond market that's for like sovereign nations, but then you also have bond market for companies where they're providing a yield by, you lend them money to provide a yield, and taken as an aggregate, the spread on the yield between the low end of the yield, like the bad credit, and the better corporate credit, that spread lets us know, gives us a sense of what market participants think about the future, right? Because if you're lending money for corporate bonds, for 5 years, where you're expecting, you have an anticipation of what you think the market will be like in 5 years from now. And if you think that things will be worse 5 years from now, which means that this company is more of a credit risk, you're going to request a higher yield in order to lend that money. That makes sense. You're going to have to pay me more to take on the risk of giving you this money for 5 years. And if you're going to take less interest, that means you think there isn't going to be that much of a problem, or in general, people think there's not going to be that much of a problem, and that is a measure of complacency. All right. So Endgame Macro on X has a great write-up for this, which I'll have you read, Peter, that goes and explains why tight credit spreads, what they tell us.
What ultra-tight credit spreads are really telling you? Corporate bond spreads are sitting near their tightest level since 2007, which on the surface reads as confidence, low defaults, steady growth, plenty of liquidity. Credit markets are basically saying, we're comfortable here. But that comfort is exactly what should make you pause. Your screen.
Sorry, go ahead.
Credit spreads are the price of risk. When they're wide, investors are nervous and demand compensation. When they're this tight, around 100 basis points, investors are saying very little can go wrong. That's not optimism, that's pricing perfection. Why tight spreads aren't the same as safe. The problem with spreads this tight is how little margin for error there is. You're basically getting paid to take credit risk. A modest slowdown, a hiccup in refinancing, or a small liquidity shock is enough to wipe out the extra yield you're earning. At wider spreads, you have room to be wrong. Here, you don't. There's also an asymmetry that matters. From these levels, spreads can only tighten a little more, but they can widen a lot. And when they do, it tends to happen fast. That's why periods of ultra-tight spreads often feel calm right before they don't. This isn't about predicting an imminent blow-up. Tight spreads can persist for a while, but historically, they show up when confidence is highest, not when risk is lowest. Defaults are a lagging indicator. By the time they rise, spreads have already moved. How can this make downturns worse? Cheap credit changes behavior. Companies borrow more, refinance aggressively, stretch balance sheets, and assume funding will always be available. That works fine until conditions shift. When growth slows or rates stay higher for longer, refinancing suddenly becomes harder and more expensive. What could have been a mild slowdown turns sharper because leverage was built at the wrong time. That's why tight spreads don't just fail to protect you, they can actually amplify the next conundrum. My view?
Downturn.
No, sorry, the next downturn. My view, I don't read this chart as everything is fine. I read it as credit is priced as if the cycle can't turn. That can hold for a while, but it leaves the system fragile. When risk is priced cheaply, small shocks have outsized effects. In 2007, spreads didn't warn anyone ahead of time. They told you the market had stopped charging for risk. That's what this looks like too. Dark.
I know. And so this is where I go, okay, Bitcoin, like, I'm not seeing why you're going to rise. Maybe you will, but I was expecting Bitcoin at $250,000 in October. We're not there. And we have even more reason not to believe that it can get there now. And so I just don't see it. And we're going to be headed into a period of a window of weakness in February, March. So I would expect we fall from there. And we're still below the yearly moving average for Bitcoin, and a bunch of other indicators are showing that things are going poorly. Yeah, if you want to look for bull market case, you can look for the bull case. But the Clarity Act and all the hubbub and all at the beginning of Trump's presidency and all the fanfare in the world didn't get Bitcoin to crack 150,000. So I'm not seeing where it's going to go now. But maybe I'm wrong.
What's the trade?
Short Bitcoin. Bitcoin to me is in a bear market right now. I'm looking to short it again. I'm looking to short it at 99,900 or around 100,000, like basically 100,000. If it gets up to 114,000, I would still short it from over there. And only if we really held strong and showed bullish momentum above Bitcoin, in the 100,000 to 114 range, would I even come close to going long. So if you just pull up the chart over here, this is what I see for Bitcoin. Bitcoin has rallied up to the unmitigated level here of 100,000, which is coinciding with this yearly average that you're seeing over here. That to me is still bear market territory. Every time we've fallen below this line and held, we have gone down to the bear market. So I'd be shorting from 100,000 or at 114,000 down to around 56,000, anywhere between 56,000 and 54,000 on Bitcoin. That would be my downside risk and the trade that I'm looking at right now. I'm also took the poly market bet of being long invasion of Taiwan, but not very happy about that.
Yeah, it's dark times. But
right.
The good news is that the midterms are coming up.
What happens if the Republicans can't keep
They won't.
the legislative branch?
No,
That's
they
it.
won't.
Lame
They
duck.
won't.
That's it.
Oh,
Lame
yeah.
duck for the next bear market.
Yeah. So where's retail going? I mean, if they're not in crypto, where are they putting their money? Or they don't have it? Or are they just sitting on the sidelines? They're just paying their
No,
debts?
money seems to be going into the economy, which is weird. Money. Who is it? Michael Howell from Cross Border Capital says this all the time. Money's got to go somewhere,
Right.
and it's. I mean, there are assets. S&P is up, Nasdaq is up. There's a bunch of things that are up. Nvidia is up and all that sort of thing. So there's market participation over there. But the GameStop rallies, the AMCs of the world, the SPACs, all the stuff, the meme coins. That money is being used for people to pay for their living because prices are high, and to look for opportunities. We have deflation happening within the job market. People are losing their jobs. People need to spend that money in order to shore up their skills and find different avenues for them. The time to renovate your home, it's over. It's over. See you in 5 years. All right, guys. Let's put an end to that for After Hours. Always fun to sit here and shoot the breeze with you guys of what's going on with markets. You can't have conversations like this with regular people in your life. You just can't, because they don't know what you know. You are of an elite brand of person because you are a trader. I said that like traitor, like you betray your country and should get capital punishment. Traitor, you are a trader. Don't slow your words on that one, Tom. That's a poor mistake to make. It's like rapper and trader.
Good to see you, Adventure. Good to see you, Adventure Trader. Hope you're doing better. Hope you had a fun time listening. Very much appreciate you being here. And to everybody out there listening, out there in the interwebs, remember we have a ton of things on this channel, not just After Hours. We've got Price Action Live that takes place Tuesday to Friday. Tom and Mike trade the open. They use Traders Post and they trade prop firm accounts. So happy to have you there. Trade with us. Maybe some of you can come on the stream. Depends on how foul-mouthed you are, meaning the more foul-mouthed you are, the better you are. No kidding. Then we also have some fun stuff on Blueprint that has been done, so go check out past episodes. Fun stuff coming up. Blueprint takes place on Thursdays at 3 p.m. Eastern Standard Time. Don't forget those free indicators and utilities and strategies are available for free on TradersPost.io. Go to TradersPost.io, go to the dashboard, and you can get that. Oh, I forgot to tell you, for Blue Sky, there is a launch plan discount that is being made available. So if this is your first time going to Blue Sky, bluesky.pro to get a launch plan, then you can get 50% off your launch plan with code WELCOME26. WELCOME26 will give you 50% off your Blue Sky launch plan. One per person and first time only. You go to blusky.pro. That's bluesky.pro and use that discount code right away. That's it, Tom.
It's fun. All right. We'll see you guys next week, Tuesday morning, 9:30 a.m. Eastern Standard Time for more trading with your sacred profit prop firm Payout Poppy. Say it. All right. Happy trading, everyone.
Take care.